Still pondering Trump's new tax plan? It can be confusing as you continue to peruse it, but Jim Lineweaver is here to help. Jim is a certified financial planner professional with the Lineweaver Financial Group. Welcome back to the show here.
Good to see you.
So here's one example of how it's confusing. Long-term capital gains taxes haven't changed, but in a sense they have changed.
Exactly, yes. What ends up happening is the tax brackets didn't change, but the thresholds have. So what happens is if you look at the different brackets that are there, that means you can actually make a little more money and still possibly stay in the 0% capital gains rate. So it's hard for your viewers to see, but if we look at the married filing jointly, what ends up happening is they can stay in the 0 bracket all the way up to that $77,200 threshold. So this is a great opportunity for people to really look at their capital gains that they may have on non-qualified or non-IRA assets. If they want to do some diversification, what they can do is, you have to add up all your other income and then what you're going to sell and what these gains are. And if you can stay under that $77,200, guess what? You pay no income tax, which is huge. And even if you had a little bit that went over, it's only a little bit of the overage that gets taxed at the 15%, not the whole thing jumping in. But people forget when they sell, oh, I could sell $77,000 of capital gains. No, you can't, because you have to add all that other income in. But this is very important. So what we do for our clients is we actually have, with our accountant that's on staff, we'll actually do projections for people to see if they can stay in that threshold, be able to diversify their portfolio more, and take advantage of that 0 capital gain rate.
All right, that's interesting. Another no change and different is investment property.
Yeah. Well, what ends up happening is there's two things here. One is it's what's called a 1031 exchange. So if I have a piece of real estate and I want to go buy a new one, and maybe I've depreciated this down because it's a rental property, I could exchange one for the other, not pay any taxes, and then maybe get some new depreciation stuff off that new property. However, what they took away is like the non-real property assets. So with that private jet that you own, what ends up happening is when you go to trade up and get your new one, you won't be able to take that depreciation from what you wrote out through your business for your business travel, because I know you don't use it for anything personal, but for the business travel, then what ends up happening is you can't roll that into another one anymore. So people that have trucking companies, maybe manufacturing equipment, they're losing that 1031 ability, whereas it still applies to real assets or real estate.
Okay, you talked about depreciation tables too. Have that changed?
Yeah, so what ends up happening is if you have on the rental property side, if you have a business out of it, then really that's not changed. But what they did say is that if you have more than 30% of your earnings before interest, depreciation, taxation, if that is due to interest expense, you want to opt out of this, what's called an interest disallowance. And that means even if it goes over that 30%, you can still write it off. And when you do that, all it does is it stretches out your tables a little bit. So therefore, if you have a commercial property, what ends up happening is it just jumps from a 39.6 to a 40-year duration, no big deal. If it is more of like a individual property or residential real estate, it goes from 27 to 30, no big deal. Still get the deductions.
Still a lot of things to figure out, and you've got help, right?
We do, because there's a lot more that we'd love to share with your viewers. So we have a seminar upcoming here at the Prestwood Country Club on how to help preserve and grow your wealth under the new tax laws. And it's going to be Thursday, April 19th, and also Tuesday, April 24th at 5:30 p.m.
All right, sounds good. To understand how the new tax plan will affect you and your investments, attend Jim's seminar or give him a call. The number's next.
To find out more, call the Lineweaver Financial Group at 1-888-313-4009 or log on to www.lineweaver.net.